Hello, everybody. Thank you for joining us today for those who are attending live, and thank you for everybody who is watching the recording of this. I appreciate you coming on in, and we'll be having a nice conversation today about some various subjects with real estate and law, and in particular looking at title insurance and some of the nuances around that. We have a special guest here today. His name is Dan Gustine, and he is a attorney with Peacock Keller. He's been there for about 7 years, and he is actually going to become a partner with them next year. So congratulations on that. And also is going to be getting married in 2022 also. So a big year for you, huh, Dan?
Very big year, yes.
And Dan's area of practice is primarily around estate planning and administration, as well as real estate law. And he is registered a title insurance agent in Pennsylvania. So we thought he would be a great resource to talk about some real estate subjects. And I think one thing that people oftentimes aren't really sure about is this whole title insurance thing and what that is, because everybody buys it at some point if they're buying a house, right? I guess. And we thought it might be a good idea to talk a little bit about that and what some of the nuances are and some other estate planning things that come into play with that. So Dan, thanks for joining us.
No problem.
And I'll turn it over to you for a second, but maybe if you want to just give a little bit of a brief overview about some of the things you were going to talk about, and maybe even we start from the very beginning, like what is a title, and how is that related to real estate, and then what is title insurance?
So if title insurance, I'll start with that, and I hate using the words itself in the definition, but what title insurance is it's an insurance policy that you're getting the property free and clear of any and all taxes, liens, judgments. Essentially, there's nothing affecting the title to the property when you buy that property. It's a very important thing, and it's a very hot issue right now. Well, not hot issue, but it's something that everyone is dealing with, given how low interest rates are. Everybody's refinancing their house. Everybody's going out, and I think everyone here knows about the real estate market in this area and across the country. It's hot as it's ever been right now. And as you mentioned, if you're going through a bank, you're going to be required to get title insurance. No bank wants to provide a loan on a property that they don't know that they won't be in first position on to, God forbid, have to foreclose on that property. So they want to make sure that they're loaning on a property, that there's nothing else out there that is going to affect the property in any way.
So whether it's an original loan or even a refi, a bank may require it, even if it's not the original loan.
Correct. Yes. Yeah. If you want to refinance your loan and take money out, so if you were going to, for whatever reason, you have a lot of equity in your house, want to refinance and either pay off some credit or maybe take that money, pay for someone's wedding, or if you wanted to, invest that money, if the money's coming out, the bank will require title insurance on the property.
Okay.
Yeah. So, and it's in Pennsylvania, title insurance is actually like it's regulated by the state. So we don't just come up with the cost for it. We can't, it's not something that we can just, give you a better deal than the other guy can. And it's based on either the sales price or the loan amount, whichever is higher. And there's two types of title insurance. There's a loan policy, and then there's an owner's policy. The loan or the lender's policy, that protects the bank. So if you're going to buy a house, bank is requiring title insurance, you always have the option to choose an owner's policy. And I would always recommend people to do that because the cost is very minimal to the owner. You have to pay for the lender's policy regardless. Let's say, for example, the lender's policy was $1,200, but the cost for the owner's policy based on the sales price was like $1,300. You don't have to pay both of those dollar amounts. You would just pay the $1,200 and then whatever the difference is for the owner's policy, so an additional $100. Because if you don't have an owner's policy, God forbid something comes up down the road, someone missed a right of way on the property or something like that. The bank is protected. The bank has insurance, and they're going to pay for all their damages. You're not covered under the loan policy, so you are kind of on your own in that situation. Okay. So always get the owner's title insurance whenever you can.
So let's elaborate that on a little bit. I would bet when most people are purchasing a property, they're not probably even thinking about their title insurance until they see a settlement sheet, or are reviewing their closing costs, and then of course title insurance comes up, and oftentimes between that and maybe the real estate tax, transfer tax, it's one of the bigger items.
Oh yeah, yeah.
But they may not have even thought about that. So is there any suggestions that you would give? Should that be discussed before, well in advance of closing? What's standard? If you don't even mention that, is the bank always going to give the bank policy?
Yeah. So what'll happen is when the bank gives their loan estimate to you, they'll have a section under, and if anyone's gotten one of these loan estimates before, there's a section of what they call items you can shop for and items you can't shop for. Title insurance is always under the items you can shop for, because you are allowed, the bank can't force you to use who they want you to use. They can recommend people. They can say, hey, here's a group of 5 that we've worked with before. We like them, but they can't force you to use their person to do the title work. So you always have that option to pick whoever you want. So they quote you what it will be, and they always kind of quote a little high, because anytime you get a loan, they have to give you all the information up front, because if they underquote you, then they're on the hook to eat anything that goes over. So it's something at the very beginning that people see, but they don't really, it's one of those things, there's a lot of numbers being thrown at you when you're getting a loan. And it's one of those things, oh yeah, I see that title, whatever, doesn't matter, pick whoever you want. But it is something you'd want to, make sure you go to, pick somebody that you trust, because while I said that the title insurance is regulated by the state, so we can't undersell someone, there are some settlement companies and there are some people who overcharge. And so the title insurance, what you get with that is that covers the search, that covers the review of the title, and that covers conducting the closing, provided you're doing it during normal business hours, and you're not driving to someone's house on the weekend or something to close. But I've represented sellers where I review the settlement sheet for them, representing buyers who are using someone else for the title. And in addition to the title insurance, they're charging them an additional $300 to review the title. And I call and I say, you can't do that. And they just go, oh, okay. And they take it off. So it's one of those things, while they do quote it early on in the process, like you said, most people don't even think about it until the very end when they see that final number. But the title insurance agent is supposed to send out an agreement or a fee letter to the buyer or borrower, whoever the case may be, to let them know, hey, here's what we're charging you for. Here's how long we're keeping the file for. If we have to do any, extraordinary work in addition to this, we would get your permission first, but here's what it would charge. If we would charge hourly or flat fee or whatever the case may be. Another thing that the bank requires is what's called a closing protection letter. And basically that protects the bank in the event that they wire me the money, I commit fraud and just take the money and leave. They get their money back in some way. The company, the title company, will reimburse in that. Every lender requires this. It's $125 charge. It's just something. It's one of those items. It's under items you can shop for, but nobody ever really looked at that, like you said, until the very end. But depending on the loan amount, it could be your highest amount other than transfer tax.
Absolutely, yeah. So what specifically would title insurance cover? Can you give some examples?
Yeah. So what the title insurance does, like I said, so it covers the search of the title. So the abstractor, whoever the underwriter, the title agent uses, runs a search on the property. And standard search is 60 years. So they look back the last 60 years to make sure that there are no no one else has rights to the property. There's no judgments against the property. There's no unpaid taxes on the property. There's not a mortgage from 20 years ago that someone paid off but was never satisfied of record. All those things would come into play. And then I, as the title agent, would review that search, provide what's called a title commitment, saying I've reviewed the title. based on X, Y, and Z. Here are the things that you need to clear up prior to closing. And it's usually on the seller. It's usually, hey, there's the seller bought the property, they have a mortgage. Hey, we need to satisfy this either at closing, beforehand, or, you have a judgment against you for $1,000 that has to be paid prior to closing, or we'll pay it at closing. And then there's another section, what we call the exemptions from title. So title insurance, it's a 60-year search. It only covers surface. We make no representations whatsoever, especially in this area, to the oil and gas, who owns the oil and gas. That is a much more complicated search that usually you have to go back to like 1850 to prove who owns the title in some cases. But we are accepting from coverage, we'll say, while we're not making any representations to the ownership of the rights, this oil and gas lease appears of record. So we're giving you title insurance with the exception of whatever rights that person has under the oil and gas lease. If there's a utility easement, we're giving you, title insurance with the exception that West Penn Power has the right to run, a utility line through your property based on the subdivision, things like that. Then once we send the commitment to the bank or to the borrower, and they know what the next steps are that they have to have cleared up by closing, then the title insurance pays for us to conduct the closing. There's no additional settlement fee that we can charge the buyer. The only time we can do that is, like I mentioned earlier, if we have to, do it on a Saturday and travel to someone's house. Then we're allowed to charge an additional fee for having to, go and travel. But if we're doing it during normal business hours, either at the bank or at our office, there's no additional fee.
So what exactly is a title?
So what is a title? Wow, loaded question. Yeah. So the title, what we would say is really, most people think of it as the deed to your property. And it's not like when you buy a vehicle and you get a loan to buy the vehicle, and the dealership holds on to the title until you pay off the loan, and then they'll send you the title. With a title to a property in the deed, at the closing, you sign the deed, the seller signs the deed, the mortgage will get recorded, but you'll get the original recorded deed back. And so you have title to the property subject to the mortgage on the property. And you can own it, and what most ways to own it is what's called fee simple, meaning you own it, yourself. There's no one else owns another interest in the property. There's other ways you can have like a life estate. Someone could have a life estate on the property, but really the main thing is just to think of is it's the deed. That's the title to the property. That way no one could come out of the woodwork and say, no, I found this deed from 50 years ago that says I have the property. That's what we call a wild deed, a false title. It's the deed that gave you ownership of the property. That would be the title to the property.
Okay. And so does title insurance cover anything relative to the deed, or is it more what happens after the deed is kind of transferred?
No, it covers the deed as well. So let's say, for example, you're buying the property as a husband and wife, and I screw something up in reviewing the deed or drafting the deed, and I put you in there as, brother and sister or something like that. And you would, there's potential that you could lose the creditor protection and that you get as owning something as husband and wife. If I were to do that, you make a claim against your title insurance, and they would pay to defend you and to clear up any issue that come up. And then I would be in trouble for screwing up something so simple.
Okay. No, that makes sense. With regards to escrow,
yes.
How does that work?
Sure. So I'll talk about let's say the whole closing process, let's say. So that would be, as part of the search, we're also ordering what are called lien letters. So the municipal lien letters, sewage lien letters, tax certifications from the township and school districts to make sure that all taxes are either paid beforehand and then prorated at closing, or paid at closing, making sure there are no liens on the property from the township for garbage, sewage. If the municipality had another lien on the property. Oftentimes what we'll do with the closing, and people are somewhat familiar with seeing the settlement statement, The seller's responsible, while we might order all those letters, the seller's responsible for paying for those. Usually both sides split the transfer tax. The buyer's responsible for recording the deed and the mortgage and that fee. Oftentimes you'll see there are certain things that are escrowed. One of the most common one is a sewage bill, the final sewage bill for property. So an escrow would be that at the time of closing, the final bill is not available yet. We have an idea of what it's going to be. We will hold back money in order to pay that once it comes in. So let's say we hold back $200 and the bill finally comes in, it's only $100. We pay the $100, we issue a check for the additional $100 back to the seller. Another common item that gets escrowed is inheritance tax. So in Pennsylvania, when someone passes away, for the majority of assets, there is inheritance tax that's owed on those. If your parent passed away and you're selling their house, there's inheritance tax on the house, and we, as the title agent, have to verify that that tax gets paid and that there are no additional taxes owed to the estate. So what we will do is we will escrow money and hold back money to pay that inheritance tax should you take the proceeds and never file an inheritance tax return and skip town. Usually what we do is we take whatever amount that's owed, times that by 1.5, and that's the amount we hold back. Same thing, once we have clearance and proof that that money's been paid, we either have to pay whatever's left or issue a check to the remaining beneficiaries for that money.
Okay. So those aren't like the actual amounts. They're being held in escrow until the proper filings are
Correct.
done.
Yeah. Basically, we just hold on. There are certain things, the majority of things we either know before closing or have an idea of what they're going to be. But if there's like a sewage bill that you're not really sure what it's going to be, we hold that money back in order to make sure that it gets paid, because sewage bills, if the township is in charge of it, is lienable. So part of the insurance that you're getting is that you're getting it free and clear of all liens. So if we don't pay that lien, it's you can make a claim against your title insurance.
Right. Makes sense. What else would be important to know?
So let me get to the rest here. Another thing. Certain banks. We'll go through what the cost is. So the cost changes for every. So if title insurance, you get a rate quoted to you based on the loan or the purchase price. And the amount, like I said, is regulated by the states, and it changes every $1,000. So difference between $50,000 and $50,001, the price goes up. There are additional things that most lenders require, and those are called endorsements to your title insurance. And what those are basically are enhanced coverage on their policy. Make sure that there are no, for example, I would say that the three main ones that most banks require are called, we call them the 100, the 300, and the 900. Basically making sure that there are no restrictions on the property, that you haven't built your property in a place where there's a building setback line and you're infringing upon that. There's no issues that someone getting a survey would discover. There's no environmental issues. And those are additional $100 that the borrower has to pay. For the most part, sometimes they can be a percentage of the title insurance premium. But those are additional fees that, the bank, again, will quote you at the beginning, but it's not something you think about or you really remember until you get to the closing. Let's see, we have the transfer tax. We talked about that, charging for an extra search. So we're not making representations to the oil and gas, mortgage note, things like that. Yeah, the perfect example I was going to say for why you want to get title insurance. I had a closing last week, and reviewing the title, we found 4 mortgages on the property. Only 2 of them belonged to the buyer. They had bought it at tax sale, fixed it up, redid it. When you buy a property at tax sale, you're not actually getting it free and clear of any mortgages and things like that. So what we did, luckily she had title insurance. We were able to go back to her company, find out what happened, how they were able to clear it the last time. In this case, they weren't able to clear it. Whoever ran the title that time missed it. So what that title insurance company will do is indemnify us, saying, listen, we realize we made a mistake on these two. If you're insuring the property for everything else, we will take care of this. And if someone ever comes back and tries to foreclose, we're going to be the ones to defend it, not you, not the buyer, not the borrower, or anything. So had they not had that, though, my underwriting counsel with Fidelity, who I write through, would have taken the position most likely that we can't close on this property. So it could, if you don't have this and something pops up, it could prevent you from selling the property. And then once you know about it, you have to disclose that. So let's say one of the items you sign at closing, it's called a purchaser's an owner's affidavit, and you're verifying that because we only search the public record. We don't know about any handshake deals that you have with your neighbor or so-and-so to lease the property or anything that's unreported. So what you're verifying then is, oh yeah, there's nothing that I know about that I haven't told you about that could affect the property. If you're a seller and you're doing that and you know that there are these mortgages, that's the reason you couldn't sell the last property, and somehow this new person running the title missed it, you could be on the hook for for fraud and for violating, inducing this person to buying the property even though you know there's issues with it. So to avoid any of that stress, to avoid any problems that could come up, it's always important to have your own owner's policy. Then you can just sit back and say, hey, that's their fault if they missed it. Let them figure it out. And we got it resolved in a day once they realized they had a title insurance policy.
Right. So on that note, you had mentioned that banks will always require it, but say you're purchasing a piece of property in cash,
Mm-hmm.
you may not be required to buy the policy at that point then?
Correct. You are not required in a cash deal to buy title insurance policy, title insurance. I always recommend you do. The only times where maybe it makes sense not to do it is if you're buying it from your parents or your grandparents, and they've lived on the property for the last 40 years. You know that all their taxes are paid. Your parents or your grandparents don't have any, they haven't been sued or anything like that. In that case, yeah, maybe it makes sense to just buy it without getting the title insurance. But for the majority of people, I would always recommend you don't buy property without title insurance for the very reason, like I just talked about. If you buy a property and I trust this person, he seems like a good guy, we got a handshake deal. Well, 3 years ago, he had a judgment against him for $10,000. Now that's on the property. And even though he's gone and left the state, they could, in theory, foreclose on the property, and you have to pay them that $10,000.
Mm-hmm.
Or if you go to sell it years later and that person had a mortgage on the property that they didn't tell you about, now part of your closing proceeds are going to pay their mortgage that they never finished up.
And those things should be discovered during the underwriting pre-close.
Correct, yes. So as part of the title commitment that I send out, like I said, there are two parts to that. There is the conditions to close. So that would be, if there was let's say a typo in the name on the deed, I would say, hey, we have to get at closing, a new deed would have to be done either before or at closing, fixing that. But one of the main ones you see in there is that, I found these mortgages on the property. They either need to be satisfied prior to closing, or I need a payoff statement from the bank saying, here's what the final balance is, send this at closing.
Okay.
But without that, they could be on the hook for something that they never thought about because they trusted the person.
Okay.
The days of the handshake deals are long gone. Yeah.
So, my guess would be many buyers, although they have maybe bought title insurance or been required when they're getting their mortgage, they may not have necessarily known exactly how it works or what they can do. But you had mentioned before, and let me just confirm. So the buyer has the ability to choose the title company that they're using. Mm-hmm. And my guess is most probably don't, or do you think many do?
To be honest, no. Most usually, depending on what bank they go to, some of the larger banks, PNC, WestBanco, they have a subsidiary that is a closing company that doesn't just do closings for them, but they do them for other people. I can tell you, I have my mortgage through WestBanco, And I can tell you from all the paperwork they had sent me, they they disclose it. They say, hey, we have a title, our own title insurance company, that settlement company. You do not have to use ours, but it would be convenient if you did, basically. And I didn't, because my firm does this, but most people don't. They just go with whatever the bank recommends.
Okay.
If the
But
bank says, oh, so and so, we have a settlement company that can do it, most people think, oh, okay, we'll keep it all under one roof. That should make it easy. But we advise our clients all the time, hey, it doesn't matter what bank you go to. It doesn't even have to be a bank in Pennsylvania. It can be, Wells Fargo, or one of the more national ones, or you could be financing through, a 401k or something like that. We can take care of that as well.
okay, so the buyer, if they wanted to, could choose to utilize a firm like yours or other law firms or closing companies if they wish. They don't have to go with just whatever the lender kind of sets
Correct.
up,
Yeah.
or
Yes.
the
Now the
realtor maybe,
person,
or
correct. The person would have to be able to provide them with the title insurance. Not all attorneys are title insurance agents. Some I know are, will have relationships with the companies. So like the attorney might handle the closing and certain other things, but the actual policy and everything will come from someone else. So the nice thing that we like to offer people is that because we have title insurance agents here, it's not, we're not playing phone tag to try to coordinate everything. I review the title. One of our abstractors reviews it. Our researches it. I review the title. I sign the commitment. I conduct the closing. You don't have to worry about someone else from another part of the state, making an opinion and then having to try to coordinate with them if there's an issue. We try to make it as simple as possible for people, because when you're putting that kind of money down, or borrowing that kind of money, it can be a little stressful. So anytime
sure.
we can take a little stress off you, the better.
How long does that whole title search process last? How long does it take?
If it's a cash deal, from the time we get the file to closing, we can do it in usually 3 weeks. And a lot of that is usually just waiting on the um, townships, boroughs, municipalities, or some of them only run dye tests on Thursday if you need to have a dye test performed, or the person might be on vacation for who handles the tax certifications or something like that. Cash deals are usually much quicker. If a lender's involved, 30 to 45 days. Um, and again, it's a lot, just because banks have more regulations and requirements. They have to send the paperwork out to you so many days in advance. Got to
Right.
make sure it passes through their underwriting counsel, to make sure that they're comfortable. So there's a couple more hoops to jump through, but I would say worst case, you always look at like 60 days, but I would say the average is 30 to 45.
Okay, it makes sense. Yeah.
Yeah.
Anything else?
No, I think that's kind of it. It's one of those, like, I could talk all day on different stories and problems that pop up. Um, I like to think that I've seen a lot already in the few years I've done this, but it seems like every other day a new weird situation pops up
Sure.
that I haven't seen before. But no, it's just one of those things that people, like you said, they use all the time, but they just don't really understand it sometimes, and they don't know what they're paying, or if they bought the property and they get that policy, they might just throw it in the garbage or throw it away. What am I going to need that for? And then 20 years later, when you go to sell the house, oh crap, I need to go find that. So I always recommend you keep it with your other important financial, estate planning documents, because it's an insurance policy to protect you.
Well, actually, that's a good question. So, say you don't have a copy of your title insurance, how would you go about getting one? Contacting the original issuer? Would they be able to provide a new copy years later?
Yeah, I would say so. We're required by law. We have to keep certain documents for at least 20 years in some form, either in paper or electronic. So if I provided a loan policy to you 10 years ago and you can't find it, you call me, we can get you another copy of that. Because I issued it once, it's not like I can prevent it from going to you now. Now, if you didn't get one and you just got a loan policy back then, or your bank got a loan policy, and you call me up and say, hey, can I get a owner's policy now? I can't just write it based on that. I would have to do basically a whole new search, issue a whole new policy at that time. But
Okay.
if I've already written it for you once, I can get it to you again.
Makes sense. Very good. Anything else you think we should discuss with regards to that?
No, I'm pretty sure that covers everything. Just and I always emphasize too, like, I touched on it a little bit, but just in this area, because we're in Western Pennsylvania, it's only title insurance for the surface. It's making no representations to whether or not you own the oil and gas, or what rights you would have to it, or what rights other people would have to drill under a lateral or something underneath your property. We're only dealing with the surface.
And that's a whole nother story.
Oh, that's a whole nother realm that could cost you thousands and thousands of dollars if you want to know who owns that, depending on what the chain of titles, like how many people died and everything else. Yeah.
Right. Well, I guess most people probably only go down that road if there's a need. Otherwise, maybe
it's usually the big gas companies, or if you, just want to, if you have maybe 100 acres or something, maybe you want to track it down. But now, for most people, it's not necessary.
Right. Well, this was helpful. I think title insurance in particular is one of those interesting things that, people have dealt with in the past, but maybe have not necessarily known why or what it does and how to use it if they would need to, or what even it does use. So I think this was very informative.
No, thank you. Yeah, it's one of the things. When I started practicing, I had no idea what it was, and now it's, thanks to interest rates being as low as they have, it's consumed about 70% of my practice.
Sure. Well, I'll open it up to any questions momentarily here, and there's a chat box or a question and answer box. So if anybody has any, they can certainly ask a question. Just give it a second here, see if anybody has any.
I always joke this can put people to sleep very easily. So.
Well, Dan, thank you. We appreciate it, and we thank you so much for your time. And we'll have this recording up on our website for other folks to watch it at their convenience. And thank you for joining us today.
Yeah, I appreciate it. Thank you guys so much for having me.
All righty. Bye-bye.
Take care.